Good morning and welcome back to the Opportunistic Trader for a Halloween. It's going to be a hairy Halloween today. The bulls think they can get away with this mark job early, so we'll see if it holds. We just shorted some futures, high conviction trade. I believe that this makes no sense. We're 100 handles off of basically Monday's low at 340 when everybody was panicking. And now volatility is basically at zero, and everything is safe. And somehow Facebook's earnings, which were hellacious, are considered to be good. So I'd love to discuss that because I'm an advertiser on Facebook for a number of different businesses, and our spend has been cut 90% because we can't convert on Facebook. So I have a very good understanding of Facebook and how that whole thing works, and it doesn't feel good. That being said, stock was definitely oversold, although after earnings it actually made a new low of the move at 138. Someone was selling 138 stock, freaking out. Now it's 154. So, this is a good opening. This is, as we used to say on the floor, marky mark in the Colt Jam, just marking up positions. And, somehow, I don't know how they do it with the market down 7% or 6% for the month. They just want to buy at every level to mark their position. So this is bookmarking. It's been bookmarking since 3 o'clock or 2:30 yesterday. I don't know why they pull this stuff continually. We are 120 or 110 handles off the intraday low of 2 days ago. Makes no sense. None of the fundamentals have changed. Elections look worse even for the Republicans at this point. So I don't know what is going on. And you have Apple tonight, and no matter what Apple puts out, it's bullish. You know that. So you could buy unlimited Apple here and not have a chance to lose. I'm being facetious, but that just seems to be the way it always is. China tariffs, fake tariffs Monday, off the table. They're not talking about it today. What else are we looking at? European markets have bounced a bit, not as much. We're up twice as much as them. What's interesting is I woke up this morning, SPOOs were at 26.95, and since I've gotten into the office, they've gone up basically 17 handles, doubling the move off of really airball, nothing. There are no sellers. There's no seller in the market. It just, to me, looking at the tape, it just doesn't make any logical sense. The correction is by no means over. I'm actually thinking, again, I'm bearish here for trade. I'm bearish, really bearish in general for year end. I think we're going to take out that low that we made in February. I think it was 25.90, or maybe it was lower than that even. But no, I'm sorry, it's like 25.20. I think we take that low out before year end. I don't think we're out of the woods in any means. Again, this is just my opinion. I just can't believe doing this business for this many years that it just continually happens. This is as illegal as you could get. So basically what they're doing is they're just buying stock to mark up their book. They're losing books so it doesn't look so bad, so they have another month that they're able to stay in these positions. Shocking to me that they can pull this off. But the truth is they pull it off every time. So there's nothing, nothing that we can do. Got to sit back and relax and enjoy the mark. Once they get done with this opening, if the market fails 15, 20 handles, it's going to trade the lows of probably into yesterday. What's amazing to me, and Vince, I don't know how you feel about this, but the S&P is up on the year basically what it's up today. And it moves, right. It moves 30 handles every day or 40 handles every day, but we go nowhere. So everybody's selling the low, buying a high, and they're losing. Oil looks awful. Can't catch a bid. It's interesting. We had Adam on from, he looks at the commitment of trader data, and the specs are short oil. So it's funny. Oil, which you think would catch a really good bid, won't catch a bid today because they got to mark it on the dead ass low of the month so that they can get the mark. Stocks, they're destroyed literally destroyed. There's blood dripping out of people's eyeballs, okay, on Halloween, and they have the nerve to mark the market up, to save their positions. So, it's interesting. We're not out of the woods by any means. As far as the dollar is a tad bit, it's kind of flat, Gold, there's your baby. I don't know if you spoke about it this morning, but gold looks terrible again. Back inside the range, not looking good. So
we let subscribers know on Sunday that the actual title was Kiss 1235 Goodbye, and we gave levels to get short or long, and we discussed that this morning, but we don't want to give it too much time. I already had a half hour, but
yeah, no, that's fine.
Go below 1232. I mean, the whole corrective phase may be over, and it's in the teens. So let's see where it settles at the end of the day.
Yeah.
But I want to come back to stocks.
I'm a seller. I sold a little. I'm not even thinking about covering this trade right here. I would like to even average more on the short side around 2703, which is about 7 handles from here. So you're not going to see that because they're marking the market like they do. So there's not, we're just looking at the tape in general. They have killed the premiums. They have it's the funniest thing. It's like 3 days ago, you had $50 straddles, and now you have like $18 straddles, and nobody wants to buy them. So, this is what we're seeing here. We'll see during the day how everything sort of plays out, but it doesn't, it just doesn't feel good, that the markets are doing this stuff. This is a complete mark job. I just want to be clear to people that are listening in. This is just a mark. It's amazing that they mark it. It's like they get, what it's like? It reminds me of like football when the running back gets open field. It's like they're in open field. They can do whatever they want. The guy's doing like the celebration dance on the 8-yard line before he's in the end zone. You know what I'm saying? This is what it's like. Right. Nobody could sell a freaking thing now. It's actually amazing. So, that's sort of, what I see on the equity front. This is all part of a mark. You got to just stay out of the way until we trade down. If we trade down, we're going to be selling aggressively today. These are great areas to sell. Don't understand why we're here. But we are, so you got to respect it. But what I want to discuss today is location. So, it's funny. If the market opened at 2,700 or lower where it was this morning, everybody would be a seller. But since we rallied 10 handles, no one can sell. It's weird. If we come in 8, then everyone has to sell. If we rally 10, then everyone has to buy. What kind of market is that?
Broken market. I'm not being sarcastic. I'd like to jump in and add a couple comments about your tape watching that are directly relevant, some conjecture, and from the perception of algorithms, and one of the reasons I think we're rallying today, in conjunction that corroborates, and at the same time from a different perspective. Number one, I think it's three out of the last 5 days we have come in and you have said, look, the market moved this amount of handles or points as you were coming into work. My point is, I think anytime you have a big move during light trading hours, as a person who's watched the gold market be spoofed constantly, it's much more transparent and easy to see when it's being spoofed. algorithms operating during lightly traded volume hours before our open seem to be dominating the market based on your own morning comments. You'll come in and you'll say, oh, we just moved 20 handles while I was talking. And I think an algo is getting turned on in light volume, and that algo is probably almost always a buy algo. And that's why we're having these kind of moves even before the market starts. So when you add in these two factors to what I call a time series algo, meaning an algo that comes in every day, let's say I'm going to make it up. Let's say at 7:45, a buy algo gets turned on every day. Not only is that making the market rally, but there are people who run time series algos. And time series algos basically say, what does the market do every day at 8 a.m.? It goes up 90% of the time. Between 8 and 9, it goes up. That creates an algo based on other algos that says buy it because it's 8 a.m., not because it's up, not because it's down. Now, when you take those trade flow factors that you're describing in your own observations and your own intuitive words, and you add to that end of the month, which encourages window dressing, and we started to see that yesterday, and you add finally, shorts are always weaker at the end of the month than longs because they're usually momentum traders. They're covering right now. So everything that you are saying and intuiting and saying this makes no sense, that's the beginning of the thesis. This makes no sense. There are algorithms chasing algorithms. There are shorts that have to cover. It has nothing to do with the reality of the economic situation or how the market should be behaving. And to that comment, I would like to just go and just give a number for the S&P. I noticed, I have a momentum. We've talked about this many times.
What's the number?
No, I've got it. Well, look,
I got a number. If we break freaking 2,700, we're gonna melt this baby.
Okay, all right. So hear me out. Hear me out. Oftentimes, you and I have discussed. I'm directionally momentum oriented, and we're biased.
Listen, I want to cut you right now. Hold on to your number. I just want to add one thing. Yeah. One thing that I think is important. And it's really weird, and I'd like to run a study on this. When the market has an up month, and my buddy in Aspen, and I'm going to say his name even though he probably doesn't want me to, Lawrence Altman, who I trade with for years and years and years, we always come up with this thing, and it's the weirdest, craziest thing. When the month is up, the last 2 days of the month are always down. Pretty much. And when the market's down, melted into the oblivion, the last 2 days of the market are up. Makes no sense, but that's what happens. This market is going to fail at this level in here. I'm very confident.
That's a very classic time series algorithm, Larry. That's classic time series. We've had a great month. Let's get out let's sell into street before the end of the month. We've had a bad month. Let's dress it to get it out. So look at it any way you want to, but that's probably spot on assessment. And it probably continues to this day and worth looking at if you have a regression model out there to look at to see how the market does.
I mean, I've never, honestly, I don't even know why we rallied 10 handles from where we were before.
So the last 2 days of the month.
Who was buying NASDAQ up 100? Okay, it rallied yesterday off the low 150 or 170 at after 130. Okay, so we're up almost 300 NASDAQ points since 3 o'clock yesterday or 2:30 yesterday. Okay, I know things are better. It all got better. So, I just don't know what's going on. I don't think we're out of the woods. If we're out of the woods, why would volatility be 22? Volatility feels like it's 8 right now. And if you look at these volatility products, actually someone pointed this out to me yesterday, they're broken. I mean, VXX, UVXY, these products are broken, dude. There is no volatility hedge here. People are sucking down options and getting crushed, and the market continues to go lower. And the bottom line is, volatility is so low relative that they have no respect. There is no respect in at all for these markets. None. Zero. They think we're going to rally every time. If we could pull up, can we pull up December volatility futures? The December volatility futures are probably 19 or 18. I mean, it's some crazy number. It's ridiculous.
Yeah, actually,
but we move 30 handles an hour.
I think there are two statements that you've made about volatility on different time. You've in alternating days, as a person who watches volatility like you do, and a person
19. Wait, timeout. The volatility year end is 1980. Okay, 1980. I've been trading this. I'm not going to call it the S word. Okay, but this. Okay, for 10 years or more.
You trading stuff?
No, I'm trading volatility, and this thing is BS, okay? I've been trading it forever and ever and ever, and literally, I have never seen it inverted out 3 months, okay? This is like the first time that I've seen this. And you know what's going to happen? Exactly what happened, okay, when we sold off. So Mike will attest to this because we watched it like a hawk. Okay, the bottom line was when volatility was 12, you know where the back month was? 12. Volatility was 12. So right now, volatility, let's just do this correlation. Volatility is 22 right now. Okay,
right,
which it really isn't. Okay, you would think that the outer month volatility would be 25, 27. You can't get it in. Okay. No, it's $3 under. But let me tell you something. When volatility was 12, and I wish we could go back and pull this up, the volatility D's future was 17 or 16. It was $6 over. So tell me what that means. That means that these guys had to get hedges on. They got hedges on at 16 and 17, the market sold off 200 to the low, almost 300 handles, okay? And volatility didn't move. So these guys don't even know how to price or trade this volatility. They're sucking long options. The long options aren't helping them. So the big hedge funds that are buying, hey, you know, let's buy downside, you know, 2,600 puts, you know, to protect. Guess what? They're not even up money on that. And the market just came in 150. And they're sucking long it. And every day that we rally, like today, they want to sell freaking, and you said this, options so freaking fast that they don't know what hit them. They have no patience. They want to be out of them when the market's going up and in them when the market's going down. They're all max long, these hedges that aren't helping them. That's the only reason that I see that this volatility index is 20 to 30% under in the back months, okay? And basically, it's saying that they have no respect for the market's downside, zero. And I'm telling you, and I know this because I trade every day, okay? I'm telling you that these guys are hooked long this stuff, okay, and they've been buying it and it hasn't worked. And it's sad because they gotta, hire someone that knows how to trade this stuff because they're getting killed. Long vol.
Larry.
Yes, sir.
Volatility. You said so much there. I just want to.
I'm like, I
just want to throw.
I'm literally tired of this nonsense, marking, rigging vol, rigging the MOCs. It's all rigging. It's all rigging, and it's just not pure. And it's not pure that when we're crashing. Okay, so yesterday during the day, believe it or not, when we were tanking, volatility ticked up to 27. It's not 21. Okay, but even when it ticked up to 27, the back months didn't move. They just got more inverted. It's just strange. So anyway, I'll let you talk about volatility. Okay. I'm going to listen because from what I see, I mean, it's just the hedges aren't working. Every time we go up like this, they got to sell volatility. They got to get out as fast as they can. They don't want it. And it reminds me of when I was at Spear Leads and Kellogg, and I used to hedge the firm's position, and it's funny. We used to buy puts. We were max long stocks. We had to buy puts. I bought puts, and obviously we lose on them. We wanted to lose on them, but then they stopped the program because they didn't want to lose any money. They just wanted to be long. That's the same thing here. It's like people have listen, how can you have a respect for a market that hasn't gone down in 10 years, okay, and literally hasn't hurt anybody in 10 years? And this month, believe it or not, if we closed in the low area at 2600 or 2610 or whatever, or even lower, it would have been a blow up. I mean, a literal statement blow up. People would have opened their statement down 10. Now it's just down 6. Everything's fine. All in one day. So anyway, you could talk volatility. I'm done with my rant. I'm pissed off.
I want to couch everything that you said in 3 points about volatility. I think will be helpful to the audience from a learning perspective, whether you're an expert or a beginner. If anybody wants to put a frame around what Larry was saying, I'm going to try and do that right now. The term structure of volatility.
You can do that.
No, I'm going to do it. I'm going to give 3 points that your things triggered in me that are relevant and current, and speaking from 30 years experience trading volatility with expertise in term structure. The term structure of the volatility market is now backwardated. First point, and this is all coming out of me as teased out from Larry's quote rant, as he says. Okay, the term structure of volatility is backwardated. Number one, it's now backwardated with what we used to call VOVU, volatility at 0 point and volatility at unlimited or infinity point. Anybody who knows calculus or trigonometry knows that if you trade bonds or oil, where the curve goes flat is important. The curve used to go flat. Here's something you could take away. The curve used to go flat, front to back, at 12%, Larry said. Now, with the front month trading 22%, the curve is backwardated.
Well, let me just stop you. The curve, you're 100% right, but the curve was never backwardated. It was never even flat. At a 12 volatility, the back month volatilities were 16 and 15.
Okay, what I mean
is they never got flat at any point. They've never been flat until this down move. And basically, by being flat,
can we just agree on the term flat? Because I don't want to crosstalk. When I say flat, I mean
12 versus
spot
12.
to infinity. Spot versus infinity. Was it when we were trading 12%? Was it 12% in the front month, 12% in the back?
No, it was 12% in the cash and 17 or 16 in the back. Okay.
Okay. All right. So but that's
now
okay.
It's inverted 30%.
No, I understand that. So the first point I wanted to make was and I'll be a little bit more eloquent about it, is the curve used to go flat. If the curve was 12% in the front and 17% 5 years out, that means the curve basically went flat at 17%, because between 5 years and 6 years won't be much in marginal utility. Now the curve is going flat. Where is volatility 5 years out now? 19,
5 years out.
20.
I don't even.
My point. No, I mean this is a concept that I want people to grasp. The backwardation, especially oil traders, should pay attention to this. The curve goes flat in the term structure. Tells you, put it this way, volatility 2 years out is a fundamental comment on perception of fear. So if the curve used to go flat at 17 and now flattens out at infinity at 19 or 20%, you're looking at a new normal of higher volatility. There are less people shorting it. The second point from what Larry said that I want to comment on, we now are in a backwardated vol curve. That means funds who play roles will play from the long side. And that means they will be buying the front. Community traders will reflect that. I think it has reflected it that the funds, the specs on volatility, are speccing long again, because at the end of the month they roll it back and they feel like they're collecting a dividend, kind of like selling an option. So that will encourage volatility traders to be long, which will drive the backwardation even steeper initially. Which brings me to my third point.
But we've never seen this backwardation, is what I'm trying to tell you. I've been doing this for years.
I know. Well, I brought it up yesterday as well, and I'm going to. My third point says what you're saying, which brings us to the third point. And the third point is this: the people who need to buy options, who need to buy volatility to hedge stock longs, have been foolish, complacent, selfish, short-sighted, whatever, what have you. their short-sightedness continues. So rather than buying a 1 year 19% volatility option, I'll just make a number up, right? They would rather buy a 1 day 25% option. And what ends up happening is these people are still short volatility. They're just long band-aids. And that will make, as this becomes if this becomes a chronic problem, you'll see the back end of the curve creep higher as everyone starts rolling their longs back. And the problem becomes what I would call term structure contagion.
But I don't see that. I see the opposite of that, and I see it actually widening every day to the negative. And the bottom line is you don't have to pay 25% to buy a day option.
I'm not disagreeing with you. It is widening to the negative.
20%.
It is widening to the negative.
But what they're saying, Vince, is that the market can't go down. That's all they're saying. It doesn't matter what it does in the next hour, 4 hours, 10 hours, or 4 days. They're saying in December the market will not be down. Okay, that's what they're saying, and they're willing to make the bet. And they've loaded everybody long volatility. Okay, and they're sucking on it. Okay, and the stock market is rigged to the buy side, as it always is. Obviously, you have Apple tonight. I don't really want to talk more about this vol curve thing. It's the bottom line is it is what it is. It's been this way on the move. It was a good tell. It was a good tell for us. We didn't utilize it the way we should have. But the bottom line is, yesterday I walked in at 1:30 from my lunch, and the Nasdaq was down 50. And the S&P was flat, and from that point, the S&P has now rallied 60 points, and the Nasdaq's rallied 280 handles. I mean, if you're buying it here, you missed it. I mean, it's just whatever.
Or you're a short covering.
Yeah, I mean, I guess.
or you're an algo short covering from 2 days ago or something like that.
I don't even know where the algos are or what they're doing. I mean, honestly.
I think they're buying in the morning like you've been calling every day you walk in.
Well, they buy every day. I mean, and then, they have to run in and shut the machine off after the market goes down. But today is obvious. I mean, it's just a rigged MOC buy. They got to buy and bid the market. So we'll sit back. We're short. Market comes in, we're going to have a very big short. But right now we're short small, looking to get bigger only if it works and give ourselves some room. The S&P, is on the high tick of the day, as it always is, or the low. Yesterday when I had the show at 8:30 with you, every tick was lower. It was like, oh my God, Nasdaq's lower. And we got long our first long yesterday at 38 on the S&P. It's now almost up 100 points from yesterday's opening. So, and the whole down move on the month is like 2 something. So really it's gotten back more than a third of the move. But again, this is what we're in for. Trump will get whitewashed in the election. They're going to lose it at least one, if not both. I don't know how that's bullish for the market. He's going to be out of control. Yesterday, let's talk about something yesterday that was interesting. How about him tweeting about the market and the price and then using an analyst from Wells Fargo? Did you see that one? I mean, that's...
Yeah. I was on the air with you. I brought it up.
Yeah, crazy. So, I mean, that's what I'm seeing here.
One interesting observation taken away from equity markets. We've had a little bit of data today. ADP came out a little better than expected. Came in at 227,000 versus 187,000. And then probably something also that the market's looking at, maybe even more important, Q3 employment cost index came in at 0.9 versus 0.5. So on the inflationary side, and then looking at the yields are higher on the day. And the 2-year yield right now is 288.5. That's only 2 basis points off the high of the year. So, the 10 years at 216 right now, so starting to creep back up. The early mantra of the equity market sell-off was, hey, it's higher yields, oh my gosh. But, I think it's so much more of a lot of different factors along with that. But if that's what they were talking about, yields aren't too far off the high, especially on the short end, the 2-year.
Bro, they're in buy.
Mike, hold on, guys. There's
yes,
a question from us. Guys, there's a question from a subscriber on the news. Larry was, I'm not sure I understand, but it's from the mechanic. Larry was 38 long level. He had marked on the Q where you went long. I'm not really sure. Mike, maybe you can translate that better. The terminology
was 38 long.
I bought 38s yesterday and sold 55s.
Right.
In
Mechanic,
like
throw another message in there. Could you clarify that?
We're just
reading.
Want to answer. Yeah, I think that was first thing in the morning. Larry did go long. He paid 38, but he covered those.
I sold those out.
I think he made 17 points on that one. We had 2 trades yesterday.
We're going to make more than 17 on this short
and
today.
One was from the short side.
Here we go. Yeah, so I think you answered it, Mike. I think you got him. Yeah. If he wants to elaborate on that.
Well, I'm just going back to actually Larry's trades from yesterday. The first
it was only
trade, 2. Yeah, it was.
There you go. The question is, Larry, now that the trade is over on the NASDAQ, the mechanic is wondering how you came up with that number.
Just looked at levels and thought that was a good opportunity to get in. So I just
did you see a stock leading that might have made you favorable to the market, or was
I just thought the market
volatility,
I thought the market was oversold for a trade. I didn't think we were going to get the move we got. The market is absolutely 100% ridiculous at this level here. Again, we're in a smaller position size, short now at 11.5. If it gets down to 0.3, we're going to add and then add again and then hope that we go through unchanged on the day. I just can't believe where these stocks are. I honestly cannot believe that they have brought this back in such a bad month. So anyway.
Well, also I think adding to what the mechanic said to answer a little bit more, every day is different. Every day you kind of take a look, especially with this volatility, is you kind of just you take a look at the indicators. And, Larry, we've been down for a number of days. Larry was looking at levels that he was looking to get long. And, each day there are different things, whether it be volatility or, different sectors. But it wasn't a specific level on a long-term chart, 38. It was more of a short-term, and just like right now he's picking, he just sold at 11.5. It's more looking at what's already transpired and looking at where we are, things of that nature, just reacting based off the individual.
It doesn't matter if it's 11.5 or 12.5 or
hey,
whatever.
Larry, I want to ask a follow-up question based on the mechanic's question. I think might be interesting to hear your response. All things being equal, and I know the moment is the moment. You're in the zone, you're trading. The reason has already been absorbed, and you're already intuitively doing what you do. Here's a question for you. Looking back on your regression type of trading, do you find yourself, let's say like yesterday's trade, the NASDAQ buys, do you find yourself, when you see a market stretch one way or the other, for example, buying when it's oversold, or after it's begun to reverse and regress a little bit? Do you find yourself more comfortable with the position one way or the other, picking a bottom? Or
I like to try to pick a spot, not be as big as I would want to, unless it's a very, very high conviction trade. I think yesterday was a high conviction trade. Should have taken more out of the trade. Obviously now the market's like exploding up. I feel like an idiot because I could have made 100 handles, not 17. But I mean, the markets here
but it could have gone the other way overnight. I think taking profits is always good.
That's what we do every day. I mean,
that brings us to this trade today.
Well, let's talk about the record for the month. Okay, I mean that's what it's really all about. I mean, I don't know the numbers. I mean, they're melting. Oh, the 9 o'clock buy program came in. Look at that.
But what I'm getting at is this trade you have on right now, I think is going to be another example of what the mechanic said. And I wanted to put a fine point on this. And I'm saying this to the subscribers. Larry sold into strength. He didn't put his maximum position on. This is my takeaway. If the market backs off on a high conviction trade that he's already sold into, meaning comes off, he's going to add to it. So he's scaling in on a high conviction or a high confidence trade. And I see a person who will add on weakness. If it's low conviction, maybe he won't add. So I hope that as an add-on, to what the mechanic said is helpful. What he did yesterday in the NASDAQ, it looks like he's starting to do that this morning on
that wasn't in the NASDAQ.
S&P.
That wasn't in the NASDAQ. That was in the S&P.
Oh, it says Q. I thought he was talking about the QQQ.
No,
he put NQ. All right. Well, I'm just
okay. No, it was in the S&P. So whatever. I mean, the bottom line is this market is rigged. So you got to be a little bit careful because they love it now.
Wait, another subscriber. I'm sorry to do this, man, because the subscribers are really getting into this. Another subscriber just alerted us. Trump is tweeting on stocks again right now, Larry.
Yeah, baby. He loves it. You got to own him, baby.
He said stock market up more than 400 points yesterday. Today looks to be another good one. Company earnings are great.
Oh, love this guy. Let's applaud. There we go. Trumpy dog. There we go.
You know who typed that?
Who
Seriously?
knows?
Whoever the person who has any financial
it is
acumen,
sick.
Who's also running for
Dude,
Senate.
He has tweeted more today about the stock market than Obama did in 8 years. What president cares about the stock market on a day-over-day basis? You know what? It's funny. His base. I don't even want to get into this. It's crazy. I'm not doing it.
Chaos.
I'm not doing it.
He's talking about the economy, not stocks.
No, but what? Oh, we had a 400. Why didn't he talk about the 800-point down day 3 days before that? He didn't want to talk about that one?
Exactly.
No, he did. And that was the Fed's fault. And
Tracy just commented on that, and this is an alert for everyone to understand. Tracy said the word ridiculous, and she actually spelled it right. Ridiculous meaning commenting on the stock market, but it's the spelling.
It's actually ridiculous. And this guy deserves to the market deserves to crash on his head. I mean, give me a break. I mean, wait, we don't even comment that much. We don't. I'm not stopping, Mike. This is what I'm doing. The bottom line is he should not comment on the stock market. Bottom line, and the fact is that it's utterly ridiculous. Market. I don't know what is the Dow futures up 300? So we're up 1,000 points in 2 days because Trump wanted it that way before the election. So I think that this area is good. We are going to short more. I don't want to, get more uptight than I already am with this nonsense. But the bottom line is today is not over. It's not going to be pretty if the market fails. We will be shorting weakness. We're short at 11.5. We're going to use a 25 stop to try to stay in the trade. And, that's what I see from here. And, the bottom line is, we could look at the straddle. There's nothing in anything. They've taken it to the woodshed. Straddle around 2,700. 5 is, it's $20. $22.
Quoting a subscriber on Trump, because this is actually funny. Trump is like the player dancing after a touchdown. Up 40. Wait. Here's the best part. Wait, Trump is like the player dancing after a touchdown when your team is already up down 48-7.
Exactly. Right.
That's the mechanic replying to your comment.
It's very funny. I was watching. I forgot what game it was, but the team was down by. Might have been the Browns. They were down like 3 touchdowns. Guy makes an interception in the end zone to save a touchdown. They're down 3 touchdowns, and the guy's doing a celebration dance, and they're down by 3 touchdowns. I mean, it's ridiculous. But listen, this is what we have, unfortunately, for the next 2 years of, the president of the United States commenting on the stock market every day. It's he's trying to scare. This is what he does. This is unfortunately what he does. He'll scare the market into thinking that the only way the stock market could go up is if you vote Republican. So anyway, that is that. I'm done. I've said enough.
Schedule for the day. We have Tony Greer coming up at 10 o'clock. He'll be talking about equities and the macro kind of themes. Then we have the DOE report, inventory for crude oil. That's at 10:30, and Andy LeBeau is going to join us at about 11:15, kind of breaking down those figures. Then Joe Vaclavec is going to be joining us live at about 12 o'clock, talking about the ag space. So that's kind of that. And then the afternoon, Larry will be back on, question and answer, stuff like that. If anybody has any questions, type them in the chat. Happy to help with any thoughts, questions on the markets.
Hopefully I'll calm down in the afternoon. Right now I'm I'm a little riled up. None of the cues are working. crude oil actually just went negative on the morning, which is very, very interesting. But it's funny. I said it about 30 minutes ago, 40 minutes ago, and I actually had a subscriber that I talk to sometimes who's a friend of mine, and he's like, I think oil today. And I'm like, listen, I wouldn't touch oil because oil basically is rigged because the specs are shorted and the hedge funds that were all long it are now shorted, so they need the mark for the month. So be very leery there. You could probably buy some weakness, but overall, this is all a mark. Hopefully,
typically being the last day of the month. Question on this: it's the last day of the month. Typically, do you see a lot of inflows, outflows on market on open and market on close, or it has nothing to do with anything?
No,
and especially
you'll see marking of
month like this.
No, you'll see marking of positions. Listen, they're doing everything right now. They got 5. They don't even have a goalie in the goal right now. They've got 5 offensive players on the ice and no defense, and they're praying that this market holds up. So if it doesn't, it could get interesting later. I don't know what's good about an up 100 NASDAQ opening after it was up 180 in the last hour, but this is what they do. They did it the day that Amazon had bad numbers. Now Amazon's fine at 1560. At 1480, it was really bad. So now they want to buy it. I don't think the market holds. I think the trading is going to get good this afternoon. The marking, this is all marking. I just want to be clear. It's all marking. It's been marking for about a day. The end of yesterday for 2.5 hours, and then 2 hours pre-open. We'll see, but generally, on a bad month, you would think they would be lightening up their positions, but it's easy enough for them to mark their positions up or try to save the month, which I could never get that. They were like, oh, we're going to save the month. Let's mark it, save the month. The bottom line is, if you look at it, how can you save a month when it's down 7 or 8%, and they're on all over the TV going, oh, this is the worst month. They haven't looked at it in 2 days. The Dow's up, almost 1,000 points in 2 days. So I don't know where this ranks, but it's not very much. But it's troubling. It's troubling. The volatility is troubling. The fact that the curve is so backward, and there are a lot of troubling signs. But overall, we'll see how it trades. We're negative the tape. We're not adding to positions till it goes down 7 from here. 7 from here, we will add to the position, and 7 from there we will. So we're going to be aggressively getting short if the market fails today. But we'll wait and see after the opening. We have about 15 minutes, so I'm going to get ready. I'm going to relax. I got to go to my Zen room in my office and calm down, and we'll be back to you guys right after the opening. But again, market much higher. NASDAQ somehow is up 100, and everything is good. So we'll see how we do here today. Good luck.